this opportunity. Thank you very much.
Thank you so much, ma'am. I request you to stay on the stage for a second more. As I invite...
Ladies and gentlemen, we now welcome GMC.
Good evening, ladies and gentlemen. Thanks a lot for a very warm welcome address from the MC team for me and introducing me to this august audience. They are taking some time to start the presentation screen. I think it's just coming up. So, in the light of what Ma'am Rajshri just mentioned, that now the Government of India is talking about a lot of innovations and change in the industry practices and, a lot of new things coming up in the marketplace. I will say, on the subject, whatever I have taken, that's also something what is being talked for the last 20 years or so, but it is finally happening, which is going to be for the benefit of the industry, government, as well as the common man. So without much ado, let's get into the presentation. Just a few words about Concord to introduce for people who don't know us. We are a 10-year-old company headquartered in Coimbatore, and we provide IT solutions, more specifically specializing in ERP solutions, human capital management. We have our own IPR for that. And we also give solutions on the mobility platform, because today disruption is there and businesses want everything on time, on a real-time basis, I will say. Okay? So we are helping our customers to integrate the ERP systems with the mobility applications also. And in this journey, actually, we are partnered with SAP. So I don't think I need to introduce SAP to you, because all of you know who SAP are. Okay? So without much further introductions, let's get into the next slide. So as we talk about GST, so which is Goods and Service Tax, is, I will say, the second most important occupied position in almost all the industry people today, right? Because we don't know what's this going to be, what is this animal going to be, right? We are talking about July 1st, so how to go about that? So I'm going to share a few thoughts of mine in terms of what GST is and what are the challenges that you are going to face in terms of systems, and how SAP Business One as an application is going to help you with that. So the agenda is transition to GST, ERP challenges of GST, SAP Business One benefit or how it's going to help you, and then if need a question and answer, and then networking. So GST transition, as most of you will be aware or would have attended seminars, you would be knowing what is GST. GST is the single largest change which has come into the indirect taxation system in the country, right? So that's going to be a game changer, as what the Prime Minister and the government of India is saying. So we have to wait and see. But I'm sure it's going to be a game changer, right? How? Because the taxable event is going to be an all-encompassing supply, okay? Hitherto, whatever we have been seeing, there have been a lot of loopholes in this existing taxation system where a lot of components have got left out of the taxation system, right? So now here it's going to be a comprehensive taxation system where both the center and state are going to join together and levy this taxation, and the states are going to have more say in this, okay? And now the next point is the place of supply. So in the current regime, as you all know, it's more of an origin-based taxation. So what's happening is the benefit for the destination where the goods are going, they are not able to get it. So the GST is going to be a destination-based, consumption-based tax, okay? And about coming to the valuation, so when we talk about a taxation system, tax is going to be levied based on a value. So in the current regime, if you look at, there have been taxes applied. For example, excise duty, if you look at, for a manufacturing, is normally levied based on an assessable rate. An assessable rate is something which is worked out with the local, excise department superintendent or somebody, where you say, this is my product price, and I will say take an abatement of 30% or 35%, right? Something like that. Now, in GST, it's all going to be removed. It's going to be more of a uniform valuation of what's going to be your goods or service, what is the value at which it's going to be given to your customer. On that is what is the tax is going to be applied. Now coming to the items or goods and services, The government of India, as you know, in your excise regime, you used to have your chapters, right? These chapter headings is now going to be called as HSN, a harmonized system of codification, which is universal standards are being formed. So all services, all goods, everything is going to be classified in that. And the next classification is with respect to the taxpayers. Now, taxpayers, the companies can be GST registered and non-registered. Under the GST registration, there will be standard companies who are going to be the regular taxpayers, and you can also have companies who are going to be exempt goods production people. For example, you talk about your export or SEZ companies, they are going to be exempt from the GST, okay? And likewise, you can also have people who go in for a composition levy or a composition scheme, whereby, they are not big companies, maybe having turnover of only about 50 lakhs or something like that. So they will go for a compensation levy. So that's another type of classification you can have. And coming to the most important thing, currently, the indirect taxation system is having too many taxes. You have central taxes like excise, customs, and various things, and service tax. And you have state taxes of sales tax or a VAT. And there is a lot of complication in terms of administering the tax for the government and also for the industry to practice and then give, because there are too many complexities, right? So now with GST, it's going to be reduced to a single tax system. All these old taxes will be subsumed. All, when I say all, I'm sorry, I will say, most of these taxes will get subsumed. Because in imports, the customs duty is going to continue. And for the state's revenues, in terms of the stamp duty and other things, those things are going to continue, okay? So we are going to continue that part, but the other areas you are going to see it as more of a SGST, CGST and IGST, what probably you would have all heard. Then coming to the rates, just about 10 days or 15 days ago, the government machinery sat down, the people of Council of Ministers, everybody sat down. They have arrived at a 5 rate tax structure, 0%, 5%, 12%, 18% and 28%. So the rates, whatever is going to be, these are going to be the rates which is going to be applied for most of these goods. But yes, to compensate the loss of certain states where the production is happening but the destination is receiving the benefit, the government is also going to continue to levy a thing called as a cess, as a compensation cess, mainly on goods which are the sin category goods or a luxury category goods, okay? And the idea is that these cess and other things the government is saying is going to be given for a period of 2 years or 3 years or 5 years maximum. And then by the time the industry, the government, the market is going to be more receptive to this, and it will start ironing out, and we are going to get the benefit of the GST regime, and this will come down. The cess will come down or maybe eliminated. And the other most important thing with respect to GST is now the industry is going to gain by way of credit utilization at each stage. So in the current regime, the main thing is certain taxes are not available as a liable, for taking the credit. So you are taking it as a cost. The main example, good example is a CST. When I have an interstate movement of goods or service, I get a CST applied and I'm not able to utilize it as a credit. I'm able to utilize credit only for what I'm buying within the state as a VAT, right? So now this is going to move away. So that is what I'm meaning here as a expansion of the credit base, okay? And this is also going to help the government because each of the state is going to get a line share of the tax collected, okay? So the government side also there is a expansion of the credit base for them. And last but not the least, the exemptions. So normally in the current thing we talk about exemptions where some unit, if you go and establish the unit in a tax benefit area or a backward area, you get a tax benefit. Now these kind of benefits are going to go away. Whatever you sell to either an export unit, 100% EOU or a SEZ, all these places you are going to tax it. But then government is going to work out, or they have already worked out methods of refund where the person is not providing a taxable output. If I am not providing a taxable output, then I'll have to claim the money, whatever I paid for my inputs as a GST from the government as a refund. Within a period of 2 years, it will be refunded. So that's an introduction to GST, which probably many of you know, but just wanted to share the information. And when we talk about ERP challenges, again, Many of the companies today have already gone ahead with the ERP solutions. Some of you may be users of SAP Business One or SAP, and most of you may be also having in-house grown systems which are running. But the key or the crux today at this juncture is for the industry to look at how do you transition the system, whether the system is ready to transition into the GST regime. So if you look at, as I told you, as probably you have seen in the previous slide, that GST is all encompassing, right? So when you look at that, the primary thing is the business process, right? So that's where, as one of the other key people, that is KPMG, has said, you have to look at GST as not just a change in the taxation methodology and tax structure, but look at it as an opportunity for you to grow your business in the right direction. Thereby what they say is, you can redefine your business model to try and take the best advantage of the GST regime. See, today probably some of these organizations will be having a branch office or a stock point in a different state just because they want to provide the benefit of the local tax credit to the customer there. But with GST coming in, your interstate movement of goods or service is also going to be available as a credit. So if it is not making business sense to have another unit somewhere else, you can look at cutting down the cost there and then bettering your profit there. So that's a key what we are talking about in terms of a business process refinement. Again, another good example I can talk about is subcontracting or the stock transfers. These two are things which normally our industry are doing it in a lot of way. And that is something what you have to look at. And likewise, your supply chain processes, the contracts what you have with your vendors, with your customers, your logistics provider, maybe in the next presentation part from the logistics side, Mr. Gatti's person will be giving more explanation on that area. So, these are all the key innovative areas where you have to probably give some thought and then see whether that needs a change before you start getting into the GST regime. And now the next thing what comes up with respect to the system part of it is the masters what you have defined for your suppliers, customers, your items have to be reclassified or redefined, right? You have to have the system should be able to have provision for you to define all the GST related requirements inputs. So you will have to define the GST registration number of your supplier or the customer, the tax type, what they are going to be registered with, whether they are a regular person or an exempt person. Then in the item master, you will have to start classifying the items as the HSN code, which means what are all your outputs you are having, you will know, you'll have to get those HSN codes and then give it to those masters. And then another one is with respect to your inputs also. Then that's where you will be able to work out the exact taxation for the items which are getting inwarded and outwarded, okay? And then you don't make a mistake. And the third one is coming to the transactions. So once you have defined the new business model, if you're having a new business model or you're continuing on the existing business model also, that transactional flow has to be tested out, because the current system, if it is not meeting that requirement, you will have to do a new one, and then you'll have to test out the flow. Unless you test the flow, when it starts going live by July 1st, which is what the expectation is in the market, you're going to end up with a problem, right? And that day we are going to scratch our heads saying that, oh, I made a mistake, I forgot to do this check, that's why this is happening and all that. And another point what you have to look at is third-party product integrations some of you would have done. A good example being retailers. They use the point-of-sale system or the POS system. Now, that is another system where the stock, transactions of sales, everything is happening, collection of money. So these are all, again, taxable events under the GST. So if the companies are having such a system, they will have to also plan to bring that part of the thing as a GST compliance part. And one more thing, before getting into the transition part, I will explain is the reports and the complaints, right? Now, in any taxation part, the government expects the taxpayer to comply with the taxation system. So it makes a very important thing is to have the system as a reliable system which can give you the correct tax figures, which is your input credits and your output liabilities, so that you are able to correctly calculate and pay the taxes on the due date. And at this point of time, let me also remind you that the government this time has come up with the GST where they are going to give rating for your compliance. just like our CIBIL rating, the companies are going to be rated on the GST, and the ratings are going to be available on the public domain, and people are going to get SMSs, because when we have the customer or the supplier, the SMS, the mobile numbers are available, and these numbers will be sent SMSs of your ratings. So if it is going to fall below a particular rating, the company is going to get blacklisted. So that's the level at which the government is going. So it's a pretty serious subject that people have to start looking at and then implement. And the last thing of the transition part is where we talk about the current regime, whatever you have accumulated as credits in terms of VAT or in terms of excise. There could be questions among some of the people here, how do I take it forward? Or you might have already gotten answers with the auditors of your companies or somebody else. Yes, it is possible to take it forward, but the system in the ERP, you need to have provisions for that. Or in your systems, you need to make a provision for that. So central taxes like excise and other things which are available as a credit, you can move it to your CGST, and local VAT credits, whatever you are carrying forward, you can take it to the SGST part. And another beautiful thing is the stock, whatever you're going to have on your hand in terms of your finished goods or your in-process or your input materials, what is accumulated in your raw material stores, these also can be taken as a benefit. The tax paid on that also can be taken as a benefit in the GST regime. Another point will be the open transactions, open purchase orders and open sales orders, the contracts what you have, that needs to also be looked into, whether you have to shortcut it, short close it, and then move forward with a fresh order, or you want to take it forward in the GST regime with a change in the taxation.